I'm going to make it a little staccato because I know that it's not a time for us to be expansively explaining all the things that we are discussing, but this is to just place some things on the table. Firstly, it's actually brilliant that I'm speaking after Deepa, because she ended with saying that the youth is interested in technology and you've got to be able to change and move along with that. I want to give you another perspective of the same thing, which is that the kind of technological ambitions that we are seeing are not very much to do with what the youth is asking for, but with something else. So even while we are saying that certain forms of technological use is introduced into the banking system, we need to watch out for the ways in which technological ambitions are rolling out, where banks will be at risk, people will be at risk, civil liberties will be at risk, because these ambitions are not, innovation. They've been telling us technological innovation should not be bound by rules, it should not be bound by law. That's the kind of imagination that has been put in place now. So I want to start with, I'll just list out some of the things, and if there is time for discussion, we can, or some other time. The first thing is that the big push in this country today is for garnering data about every person. And one of the places through which it is possible for such data to be garnered, and one of the very important places, is through banks, which have their systems where they have enormous amounts of data about people, and they have rolling data, in the sense that every time a person withdraws money, every time they spend it, where they spend it, if they're using a credit card or a debit card. This kind of data is something that the current technological push is driving us towards. And therefore, we must remember that, although we are talking digitization, it is not just a question of digitization, it's about datafication, and every person becoming a data subject, and therefore becoming points on the database, and banks being one of those places through which they want. Actually, the fact is that, when Mr. Shivkumar was talking about the future of banking, I was thinking that about 7-8 years ago, there was another talk that was given on the future of banking by a technocrat, by a techno-marketing person really, who basically said the future of banking is that the banks will vanish and everything will become fintech, and all the money will go on to ether, and you don't need brick and mortar banks at all. You don't need, you need the legacy systems to transfer itself into fintech companies. So we need to understand, and I'm not sitting here to hold a brief for either banks or against fintech companies. That's for you to resolve. But the method that is being used, which is coercing people to get on to, demonetization was a classic case where they tried to push people onto cashless, whether you wanted it or not. And post demonetization, it's become very clear that people did not want, or did not want to be reliant only on this system, because many, the amount of cash that is in circulation now is, they say, is even greater than it was before demonetization. So it is not about people's wishes. It is not about what bankers are saying. It is about a technological ambition that is entering every space. Banking is one such very important space, and that's something that we can't forget. The reason that they also want to shift the whole banking, whatever it is that banks do, into the e-zone, is because they want digital footprints to be left everywhere, so that every person can be tracked, traced, profiled. When you say today that why don't you give education loans really can't rely very much on their own, on the students' own digital footprints. But it may, it may depend upon the parental digital footprint. Child may actually go away after that and do their own returning. But what has become important for the fintech companies is not that you need to reach people who need the money, but to give money to people who they are sure will be able to give it back. And they want that through being able to see a whole lifetime of transaction. It's an extremely intrusive way of doing this, and it has very little to do with the need of the person and a lot to do with the business model that they are trying to create, which they can do, which they can operate with risk to a minimum to them, but risk enhanced for people who become customers to this system. The Jan Dhan Yojana is another of those cases where actually the way in which it has been rolled out, and during the COVID period, we have seen that I don't know whether to call it funny or whether to call it tragic. One of those times that we heard, for instance, in early May, from the chief economic advisor, who said that in late March, money had been put into the JDY accounts, and he said that the amount of money that there was in the JDY accounts just kept growing, which means that people were not taking the money out. So it grew in end of March. When they put it again in April, it grew. So his reading of that was that they leave the money there because there was no distress. And for those who've been working in the field, they know that they didn't take the money out because they could reach the money. Because under JDY, depending on banking correspondents, who very early on in 2009, the RBI had already said that banking correspondence is not a great solution to this because there are too many problems with it, including the risk of having to carry a lot of cash, including that they are not able to recover as much as they require, as much as will be, which will make it sustainable for them, and about 5-6 reasons like this. So that people are not able to take out their money has become a reason for them to say there is no distress, and to say that during COVID, when we know what was happening with the migrant population, we know what was happening with the rural population, there is a certain absurdity in this, which I as a common person definitely would ask banks to look into and report, because otherwise all these mythologies that are being created become fact. The other thing that I must say here is that there are certain kind of what I can only call ugly ambitions that we have seen manifested. In 2016, for instance, and I just want to read out a brief, very small paragraph from an article that was written by a banker in the Seminar magazine, where he's talking about, again, the future of banking and where banking will go. And he says, with the advance of smart watches, banking is already slated to experience a shift from one's pocket to one's wrist. Wearable banking will help banks roll out contextual notifications to clients, which means that actionable promotional content can be delivered at just the right time. The future ultimately lies in personalized contextual engagement. However, smartwatches are not the ultimate frontier of wearable technology. As technology extends beyond smartwatches to include smart eyewear, gesture control devices, and other connected projects in the larger Internet of Things, we envisage, that is the private banking community, envisage an exciting world of predictive banking to emerge. All the data that one generates across one's daily life can be captured. And then in brackets, there is like a parenthetical apologetic statement of, with due permission, of course, connected and analyzed from sensors embedded in everything from wearables to cooking utensils to the car. The area is unbound for exploration, and as we explore further, 1 billion possibilities will emerge. This is the vulgarity of the technological imagination that is being brought into the banking system. And as a common person, I would ask you to understand what this is and to stand up against it, because this is, you don't treat human beings like this. But they will. If it makes money, if it makes profit, we'll see this. There is another strange phenomenon that we've seen, which you might also have noticed. For want of a better word, I would call it the infosicification of this whole, this whole technology ambition. In 2008, December, you had the NPCI being set up, and the first chairperson of that was Mr. Narayan Murthy. When Mr. Nilekani became the chairperson of the UIDAI, he also became honorary advisor to the NPCI. And the idea was to link these two up so that money will move from a UID number to a UID number, Aadhaar number to Aadhaar number, not from bank account number to bank account number. This was part of the planning that was done so that they could see banks becoming irrelevant and that monies could just move from UID number to UID number. That, fortunately for you, it did not work, and fortunately for me too, it did not work, because I don't think much of the planning has been done very well. But that was the NPCI beginning, and I think as bankers, maybe you need to go back and ask all those banks which are promoting the NPCI about what they are handing over to the NPCI. It's not that NPCI is a bad institution. It's doing, certain parts of its work are interesting and good, but the ambitions within that, which are being fed into the system, are very different. And we saw, for instance, what happened with Airtel. That happened because of the embedding of the UID number into the NPCI, mapping of it on the NPCI system. And the last number, the last bank which gives it in, that would be the bank to which the money would be transferred. And Airtel, which had got a license but which had not started any banking system, when the government wrongly informed people that they had to go and authenticate their mobile phones with the UID number, at that time, Airtel decided that they will do two things. They will, when people come, Airtel customers come to them, they will authenticate them for their mobile phone, but they will also open a bank account for them and let NPCI know. And the people themselves whose money this was and whose accounts these were not informed. So the only way it got caught out was because there was a certain number of people who had the wherewithal to pursue this, who found that the gas subsidy which had to come to them, which was coming to them in another account, suddenly stopped coming. And they said, what on earth has happened? Why is this money not coming? And they found that it had been diverted and it was going to Airtel. I really think it's important that that bankers and within the banking system, you follow these so that you don't allow this kind. This is criminality. And you've allowed this to happen because, if you're not watchful, it will happen. And UID was another of those where you were pulled and you were made to put your foot into it. And they said you have to have an enrollment station in your bank branch. If you don't do it, we'll punish you. It is important to learn that these are not powers that agencies just have like that. So being able to fight back against this kind of unreasonable and illegal kind of demands that are made of the banking system, because if the pressure is put on you, Citibank doesn't have to do it, but State Bank of India has to do it. So think about what this means when this kind of pressure is being put on you, and when things go wrong. And in the UID system, the biometric system is so bad that it's going to cause its own set of problems. And knowing what, the number being embedded everywhere is also a problem for you, because it means that what Mr. Shivkumar again was referring to about the cyber frauds that are happening, the increase is bound to happen. Just a couple more things and I'll stop with this. The third two things that I would request you to watch and notice, please, is one, that a non-personal data draft has been put out. Why I call it Infosys is because this has now been brought in by a committee that was headed by Chris Gopalakrishnan, who's also of Infosys, and where they are saying that all data, that is every business that has any data with it, will be considered as a data business. And you will have to share all the raw data, through some regulator that they're going to set up. They're going to have to share all that data so that GDP can grow, and so that you can have more, you can provide better services, not you, but people who are going to make businesses out of the data that you're collecting. I think it's important for you to read this document. It's just out and it's going to be, they've given time for it to be, for comments to come. And one more document that you need, well, not document, but a proposal that you need to look at. It's called the Open Credit Enablement Network. Again, Mr. Nilekani's brainchild. And this comes after that. I mean, if you've looked at the deepening digital transaction, which he chaired for the RBI. Now, these are things, sometimes I worry that bankers are only looking at the financial system and they are really, and the monetary system, they're really not looking anywhere else. And if you don't look at what is doing to you and the kind of technological ambitions that are coming at you, you'll find that, you've lost the game even before it's begun. And just two quick points, which is one, that when cashless came in, you may have noticed that it was not only about it being cashless. If you go back and look at the documentation, you'll find that they said cashless, paperless, presenceless. So that basically the interest is not in the person to whom anything is being given. The person is, you are presenceless. I just want to know from where to where is the money moving, because I want to follow the money. So this kind of idea of cashless, which is about data, which is about tracking, this is big. It's like a big time fintech dream that they have, and a nightmare for many of us. And the last is that every disaster produces opportunities. But when these opportunities are converted into something which can result in violation of rights of other people, then we need to really pause. So demonetization showed how you were bringing in this idea of cashless, paperless, and presenceless. Now you find that with COVID, there is again a push to make everything more cashless than anything else. Now, I think it would help a lot if the banking industry were to sit back and try and figure out and understand what cashless means, what is the role of technology in all of this, and to figure out what these new devices are that are being brought in, which seems to be coming from the same set of business interests. Thank you.